Gold, which yesterday at one point looked like it was falling, and you can't see it on this graph, but you can see the spike down there in the day, has turned around on its heels and hit yet another, guess what, all-time, you say it out loud, high. So gold is an all-time high. This morning it hit $3,890, not quite $3,900, but if it gets to 3,900, I suppose people immediately say 4,000 is the next stop. In fact, to be honest with you, for me it feels like it's already at 4,890, not 3,890. So maybe in my head it's lagging somewhat, but it is at an all-time high, and we'll see if it goes any higher today. Now, some people are saying that the reason the gold price is up is because of the US government shutdown. So with the Federal Reserve and other organizations and agencies in the USA running blind without important statistics being available, nobody knows what's going on, and to avoid uncertainty, some are choosing to buy gold. The Dow Jones Industrial Average, it looks like it was an all-time record yesterday, and we'll go and have a look at some of the other indices here. So now I'm going to look at the S&P 500. It's 6688, up 27 points last night, or 0.41. Again, it's virtually on the all-time record. It's just tiny smidgen below. And the Nasdaq 100 index at 24,679. That's up 68 points yesterday, or 0.28%. Again, it's not very far off the record. In Europe, we've got the FTSE 100. That's pushing it has pushed through an all-time record at 9,418, up 36 points, or 0.38% today. And elsewhere in Europe, we've got the DAX index up 110 points, up 0.47%, and the CAC 40 index up 5 points, and the Swiss index doing rather well, and I'll explain that in a minute. It's up 161 points or up 1.34%. So European stocks are dominated by news in the pharmaceutical sector. So broadly speaking, pharma stocks are trading higher as a consequence of something which happened with Donald Trump yesterday. He unveiled plans to launch a drug buying website for consumers at low prices, he said, and he's done a pricing deal with Pfizer in America, which analysts say will bring some certainty to the industry. And lastly, he's offered a deal where companies which keep their prices at low levels, and that's not really specified, but I think the idea is that they shouldn't be higher than elsewhere in the world.
European pharmaceutical giants led the charge, with shares of Pfizer, Novartis, Roche, and Eli Lilly all surging. The rally followed policy announcements from former President Trump, who revealed plans for a drug-buying platform designed to lower consumer prices. Paradoxically, instead of dragging stocks lower, the news boosted them. Investors viewed the policy as providing long-term clarity in an unpredictable sector. The promise of fast-track approvals for affordable drugs added another incentive. For markets, it was less about immediate profitability and more about regulatory certainty, which often drives investor confidence. The health sector became the clear winner of the day.
He said that they will be able to get their medicines fast-tracked in the United States. So let's just go and have a look at how some of these medical companies are doing. Here's Pfizer, who struck some sort of deal on pricing with the United States. Now, I don't know why striking a deal to sell goods at lower prices is good for the stock, but it's up 6.83% yesterday. You can see that big leap there as it shot upwards, and it will open a little bit higher today. Maybe the reason pharmaceutical stocks are going up on this news is not because the news is bad news, which is back to front, but maybe because it brings some certainty to a very uncertain situation. Looking at Eli Lilly, they're up 5% today. Again, you see a nice leap there. And in Europe, we've got Switzerland. In Novartis, we've got Novartis up 2.5%. There's the gap up there. And Roche is up 5.93%. You can see a big leap. and other European stocks like GlaxoSmithKline and so forth are up. But AstraZeneca, you'll see a leap up there. Novo Nordisk, again, a little bit less of a leap. But what we're seeing is a collection of European stocks go higher, particularly the pharmaceutical sector, on the back of this plan by President Trump to launch a website where consumers can buy drugs more cheaply, and also getting a deal with Pfizer to lower their prices, and also getting a deal with Europe that companies will be able to get their medicines fast-tracked, provided that they keep their prices at international levels and don't overprice America. I haven't got the full information, so that information is subject to being checked and it might be wrong. So let's just have a look at the futures and see how the futures are doing this morning. Broadly speaking, this uncertainty about government shutdown is creating a lot of uncertainty. So if we look here, it's a sea of red. The Dow is going to be down 0.41, S&P will open 0.45 down, and Nasdaq will open 0.48% down. So not much going on in the equity futures of interest. It's more down than up. But obviously the gold mining sector is doing very well due to a higher gold price. Now,
despite equity market records, futures trading painted a different picture. Wall Street opened weaker, weighed by U.S. government shutdown fears. With agencies unable to release critical data, investors turned defensive. Gold once again became the safe haven star. Prices hit $3,890 per ounce, brushing against the psychological $3,900 mark. Many traders now see $4,000 as inevitable. Rising gold reflects not panic, but uncertainty. When the political system stalls, markets search for anchors. Historically, government shutdowns have fueled short-term volatility, but this time the scale of gold's rally suggests broader concerns about fiscal stability and monetary policy direction.
Gold, which yesterday at one point looked like it was falling, and you can't see it on this graph, but you can see the spike down there in the day, has turned around on its heels and hit yet another, guess what, all-time, you say it out loud, high. So gold is an all-time high. This morning it hit $3,890, not quite $3,900, but if it gets to 3,900, I suppose people immediately say 4,000 is the next stop. In fact, to be honest with you, for me it feels like it's already at 4,890, not 3,890. So maybe in my head it's lagging somewhat, but it is at an all-time high, and we'll see if it goes any higher today. Now, some people are saying that the reason the gold price is up is because of the US government shutdown. So with the Federal Reserve and other organizations and agencies in the USA running blind without important statistics being available, nobody knows what's going on, and to avoid uncertainty, some are choosing to buy gold. Now, let's have a look at something else which I find rather strange here. We're going to go to look at the VIX index, the VIX index. The VIX index is an index of implied volatility. It's based on options prices in New York, and the VIX index has been at a pretty low level for quite some time. You can see it's been since about May. It's been at a very low level. It's been last few days around the level 16.76. So that's a complacent level. It's a low level. It means that people are not worried. They're not too frightened, and they expect the stock market to keep going up. Well, complacency is high, but what's odd is why the gold price is going up. That's kind of unusual if complacency is high and people expect the stock market to keep rising. So we've got the certainty that we'll have rate cuts in October and December, more or less. So it's hard to say what's making those indices ride higher. Silver is at a 14-year high at $47.26. I know we often talk about $50 silver, but I don't see that anywhere in the official prices. So at the moment, it was worth £1, now it's worth £25. So as I see it, gold should be at a higher level than the current 15,900 and, sorry, not 15, at 1,590.
Silver climbed to $47 per ounce, marking a 14-year peak, while platinum hovered near decade highs. Palladium lagged, but precious metals as a group attracted investors seeking safety. In contrast, oil prices slipped, continuing their steady decline since early this year. Falling energy prices, often seen as a barometer of global economic health, suggest weaker industrial demand and rising unemployment concerns. This divergence, gold soaring while oil softens, signals a split in investor outlooks. Monetary risks are driving gold higher, while real-world consumption trends are pressing energy markets lower. The imbalance raises questions about recessionary pressures ahead.
Right, let's have a look at oil. Well, actually, before we look at oil, let's look at silver. Yes, so silver's, gold you saw is 3,881, and silver we see is at $47.29. Again, that's a 12-year peak. Actually it's a 14-year peak, and it's climbing as we speak. So it's up 1.38%. Gold is up 0.62% today, at 38,81. Platinum is also not today climbing, but it has been climbing. Today it's at 1,590, which is as good as makes no, as near as makes no difference, a 12-year peak. And palladium's not doing so well. It's at 1,274. Oil. Now, oil is drifting off, as you can see. We go back a little bit further. The oil price is coming down gradually since the start of this year, which is telling us something. You know, the world's most used commodity, oil, is falling, and as is some other commodities like iron and copper, which is rising a bit but has been falling, kind of indicates that the economy is traveling in a different direction from the way gold investors see it.
Often overlooked, copper has quietly regained attention. Trading around $4.86 per pound, its stability masks looming structural shortages. Analysts warn that surging demand from electric vehicles, renewable infrastructure, and data centers will strain supply within a few years. Copper miners like BHP, Rio Tinto, and Southern Copper are positioning to benefit from this new gold narrative. While short-term prices remain range-bound, long-term fundamentals point upward. For investors, copper is no longer just an industrial metal, it's becoming central to the green transition. The question is not if prices will rise, but how quickly the coming shortage will unfold.
So gold investors are seeing some sort of monetary mayhem, which is why they're buying gold. But everywhere else in the world, commodities are selling off, and that's due to the falling employment, rising unemployment, and the slowing economy. So we're looking at, perhaps with the oil price going down, a looming recession and a slowdown in business activity. But I'd just like to touch base a little bit on copper. So we're going to bring up the copper chart here. That's copper, and you can see it's been fairly steady over the last year or so. I mean, it's obviously had its ups and downs. It was at $6 at one point and down at $4.50, and it's now at $4.86. So at the moment, it does look like copper is going nowhere. You know, up, down, but ending up back where it started. But I think we should keep an eye on it, because I've been reading that within a few years there are going to be some very severe shortages of copper, and copper might be the new gold. So what I'm reading is perhaps it's time to start building up on copper. I mean, if you don't buy copper directly, which I don't because it's too bulky, perhaps the way forward is to buy the copper miners. And in that respect, you've got companies like Anglo American, BHP, I think, the Southern Copper. There's a couple of copper companies. There was obviously plenty more if you look around. Rio Tinto, did I say? Vale, I guess. By the way, you have to check those. I'm not sure they're all copper miners, but I'm pretty sure they will be. So yeah, copper rising slightly. As you can see, it's just this little chart, if I look at the last few weeks, there it is, that little spike up over the last few weeks, which seems to have started around end of July.
Consumer confidence has slipped to a 5-month low, while U.S. job data shows softening labor conditions. Against this backdrop, smart money has been rotating into gold miners and ETFs like GDX and GDXJ, both recording strong gains. Meanwhile, volatility remains muted, with the VIX trading near historically low levels. This paradox, rising gold alongside low volatility, underscores the market's confusion. Investors appear both complacent and cautious, betting on rate cuts while hedging against political and economic shocks. As we move deeper into the year, markets face a crossroads, soaring safe havens on one side and slowing growth on the other.
What else is going on in the world? We've had the Consumer Confidence Index. That's at the lowest level in 5 months. Not very good. The jobs data, which we've had last month, was not very good. It's trending downwards, let's just say. And the smart money, which is seeing this mayhem, is maybe heading into gold miners as well as gold. Let's just have a look at the gold miners index. So I'll bring up gold and gold miners. I think I was on it then. Yes, there we go. So we need to go to gold. There we are, gold. So if you look at the ETFs here, that's GDX. The Gold Miners Index, GTX, is the symbol. It's the VanEck Gold Miners Exchange Traded Fund. That's up 0.9% yesterday, and it's likely to open up 1.19% higher today. Same thing for GDXJ, the Junior Gold Miners Index. That's up 0.8% today, and it's likely to open up 1.26% higher than that later today. So that's the GDX for you. On the bond front, there's really nothing to say, so I'm not going to bother showing you that. No big change.